In the previous week, the rupee remained broadly stable and was traded in a tight range between 74.85 to 75.10, the low and high for the week being 75.18 and 74.79. Rupee has now established a new trading band against the dollar between 74.50 to 75.50 till the end of December 2021. The sudden weakness in the rupee exchange rate arising out of concerns on vaccine-resistant Omicron triggered a weakening trend in the rupee. As long as the rupee's decline is gradual, RBI may not actively intervene in the market and allow the nominal exchange rate to depreciate to correct the rupee's overvaluation in REER terms estimated at close to 9% as at the end of November 2021. The forward exchange rate for end March maturity is close to 76.00 as on date. It is quite possible that the spot exchange rate level at the end of the current financial year may exceed the 76 level. Despite the divestment flows expected in the last quarter of the financial year, we expect the rupee to end the current financial year at 76.50 or so, representing a depreciation of about 4% from the closing level of 73.50 as of 31st March 2021. In the interim period from now to end March 2022, the sell-side intervention from RBI will have limited impact on the rupee, and a gradual depreciation in the home currency to the 76.50 level seems to be possible. The sudden weakness in the rupee exchange rate was unexpected, and the importers rushed to hedge their unhedged payables to limit the exchange rate losses, which triggered a weakening trend in the domestic currency. At the spot level of 75.30 plus, exporters are recommended to sell their medium-term receivables to the extent of 50% of their unhedged revenue book, and the balance of receivables can be hedged at various spot target levels between 75.30 to 75.60 before the end of December 2021 or earlier. As long as the rupee's decline is gradual, RBI may not actively intervene in the market and allow the nominal exchange rate to depreciate to correct the rupee's overvaluation in REER terms estimated at close to 8.5% as of November 2021. During the period end December 2020 to end November 2021, BSE Sensex was a top performer among the Asian stocks, and the Sensex rose by 19.51%, followed by a rise of 18.30% in Taiwan weighted index. Hang Seng registered a steep fall of 13.79% in the referred period. Except yuan, all the Asian currencies had depreciated against the dollar in the period, with Thai baht and Korean won having registered a depreciation of 12.47% and 8.99% in absolute terms respectively. Chinese yuan recorded an appreciation of 2.87% and Indian rupee has depreciated by 2.79% against the dollar. In the period between end December 2020 to end November 21, DXY rose by 6.73%, with the euro and pound depreciated by 7.18% and 2.76% respectively. against the US dollar. In the referred period, Rupee posted an appreciation of 4.82% and 6.04% against the euro and Japanese yen respectively. The 10-year US Treasury yield is currently trading at 1.44% as investors were concerned over the emergence of a new coronavirus variant and its impact on global growth. In the US FOMC meeting scheduled on December 16 to December 18, Fed will likely discuss a faster withdrawal of its massive bond buying program. The spread between the 2-year and 10-year US yield has contracted to about 82 basis points from about 110 basis points a month ago. The spread contraction represents the higher possibility of rate hikes in the second half of calendar year 2022 as compared with the exports in absolute terms in the earlier months. From April 2021, the exports fell to USD 29.88 billion in November. Exports registered USD 262.46 billion in the April to November period, and in the remaining 4 months of the current fiscal, the exports growth of USD 34.39 billion on an average basis is required to achieve the exports target of USD 400 billion in the current fiscal set by the government. The IMF has retained its GDP projections of India in the current fiscal at 9.5% and 8.5% growth for the next year, retaining the status of one of the fastest growing economies. The economic recovery continued in the globe but at a slower pace. Based on fears the new variant will hit travel, the Brent crude futures dipped to a low of USD 68.14 per barrel on 1st December 2021 and currently trading a tad higher at USD 71.00 per barrel. In view of the expected demand contraction in oil, it is quite possible the OPEC plus countries may withdraw the output increase of 400,000 barrels per day from January 2022 onwards in their effort to stabilize the oil prices.